Good afternoon, traders, and welcome to the Blue Line Metals Edge here for Wednesday, February 9th. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. If you haven't gone to our website here, it's www.bluelinefutures.com, especially if you're watching this on YouTube. Be sure to hit the like and subscribe button. And then also, we do encourage you to go to our research page here and look at subscribing to. It's a free complimentary, it's a 2-week trial. And the reports that I kind of want to identify that you should be looking at is the Morning Express. That'll cover all the macro markets, gold, silver, S&P, NASDAQ, the oil market. Those are the markets that many of you, express that you love those markets. Those are the ones most actively traded here. So you put your basic contact information in there, select Morning Express. And then we do encourage you to take a look at like the Grain Express. We had a USDA crop that came out here today. It was quite exciting. And then also, if you haven't, looked at some of the performance on some of the softs like coffee and cotton and sugar, these are all really moving markets here. Cocoa, 4-month high, coffee, 10-year high today. You could select. We give you actionable trade signals on all that. So one of the articles, I kind of want to bring up a couple things. One of the articles, I keep thinking about this article. And it came out like on February 2nd. It was on Bloomberg, and it says it looks like a whale is snapping up gold bullion below $1,800. And I really think that that person or entity, whether it was a central bank, ETF, whoever it is, article kind of tries to dissect who it was. I really think that they're looking forward with, we reached peak hawkishness on a number of interest rate hikes. They're saying, Bank of America is saying 7. They're saying 50 basis points right out the gate here. And I think that whoever this is really thinking that they might not be able to do all those rate hikes. So that's something that I just wanted to point out. I think it's a great story here. And it's also coincides with the range that I've been calling many of you and been real active on as far as buying gold and silver, at those levels here. So going to get into the data that's coming out. There is a really big data point coming out tomorrow, and it's this CPI data. And basically, it's a change in price of goods and services purchased by consumers. The actual number, greater than the forecast, is good for the currency. The underlying currency is the U.S. dollar. So you could see that some of these CPI previous ones, they've been higher than expected. They're expecting 7, we come out at 8. They're expecting 6, we come out at 9. This 4 versus 5. So, I still think this is going to be a really red hot number, because if you look at what makes up the bulk of it is going to be housing, which those haven't gone anywhere. Housing prices like rental, that hasn't gone anywhere. It won't go anywhere until like March, April, May. That's when, there's a lot of shuffling, a lot of people moving out of their places, and prices get real competitive. So they might come down from there. Then automotives, that's one of the only ones that I think might have slipped a bit. I just purchased a new car. I was able to negotiate on the price. That was last Friday, and actually got it down a bit. So that might have peaked. And then your fuel costs, your crude oil and unleaded gasoline, those have just been going through the roof. Crude oil is right near $90 again. So I think that this number, and then with the grains, they're skyrocketing too. So I think a lot of this is going to be, it's going to be another red hot number. So if you've been working closely with me, I recommended that you take some of your gold, some of your silver off, depending on, how overweighted you were, what type of trader you are. I made that recommendation here today and yesterday because of the fact I don't want that CPI number to come in red hot, and then all of a sudden you get people talking about maybe 2 consecutive rate hikes that are 50 basis points. And that really kind of puts a knife in the gold market, sends it back down. So pulling up this gold, I was looking, and also I changed the the display settings on here so it's white. I think it might be easier for you guys to see the charts and things. So looking at gold, this is kind of that since last May chart. We're making a series of lower highs, so I want to be cautious on gold here. So I recommended, if you look back here, we've been buying kind of in this zone is where we want to be buying at. Is this 1805 down to 1780. Those are the levels that I really like. I think that it's got really good pocket support in there. I don't really see much of this action taking place. You might have another press down at a 1750. We'll keep some orders working out there. There's no reason to, reel in the fishing pole. Let's just leave the line out there. It doesn't cost you anything to have an order sitting out there. Maybe you get it on a flush down. So gold, I'll probably be putting new orders in 1805 down to 1780. See if we get some kind of correction. What's to say I don't miss it and the market keeps going up to this like 1850? Totally possible. That's the trend line. We are working some sell orders there for people that had, many positions on, and we want to scale out, scale back into things, do things incrementally. Remember, it's not all or one, all or none when it comes to positioning. So, and then one other thing here, as far as if it does break loose and go to the upside, I'm probably going to look at longer dated call options that go out into like the second half of the year, like from June on out to December. I'd look at buying some calls, maybe at this 1875 price strike, maybe 1900. And if you don't have a lot of capital in your account, we could always do a call spread as well. That'll reduce some of your costs, reduce some of your liabilities. And additionally, if you're really aggressive on the option side, we get back down in this range. Implied volatility will probably spike up. Everyone will be buying protection. We'll want to sell it to them. So we'll either sell like a 1750 put, maybe a 1750, 1725 put spread, or even something in the 1600s. But we got to get there first, and we've got a lot of other stuff here to cover. So that was that front. S&P 500, this was a big higher low. This was that all-time high. It looks like this fell too far, too fast. We bounce back up here. We start going down again. Now they're releasing some of those lockdown restrictions. I think that's why the market's coming up just here a touch. You also had it was like an ECB, it's like a Fed governor. He came out and he said that they can't do 2 rate hikes over in Europe, and that's too many. So you saw European stocks take off last night on it. You saw the U.S. stocks. Those also tracked it. This market right now is pretty thinly traded. This cleaned a lot of people out, and they haven't come back into the market yet. So the volume's really low. That's why I don't trust this kind of rally, and that's why we'll use those micro S&P contracts, build some shorts in. If we get up here, I'd start being concerned. If we made a new all-time high, I'd probably let it even ride. Remember, we're going to have decelerating data. We're going to have the Fed actually raising rates. And then we'll have a couple other things that could impact it. I had some notes on. The data is going to weaken. The employment, I think, is also going to weaken too. So these bogus job numbers that are coming out, I think that they're going to start posting more normalized numbers, and they're going to be a lot smaller. They'll be like a couple 100,000. They'll be legit. People actually went back to work, found jobs. So that decelerating data, I think, is going to weigh in on the market as well. Plus, you got 50% of the NASDAQ are down 50% since that kind of peak high right around here. So looking at a couple other markets, silver's in this downtrend right now. I know everybody thinks it's going to go through the roof, but you could have this, problem with supply chain issues. Remember, like 60% of the mined silver comes out of the ground, gets shipped to China. China turns it into some kind of product, some kind of end product, and then us consumers in a high growth environment, we go and buy those products, and that's where a lot of the demand comes from. So I think that there's been a little bit of a slowdown in the demand because of those supply chain issues. If they can resolve those, you probably get silver going back up here to the upside. So for those of you that bought it down $22, we never got it down here. There are some people that still have these positions on. Those are more legacy clients that have been around, since the last year, and we'll sell these rips. We'll sell against these various things right here. Now, again, I'm cautious too on it because at this level, because that CPI number comes out red hot, 250 basis point interest rates becomes the chatter. You see yields over 2%. You're probably going to see this come back down. So we'll get some orders working. We'll start buying again, $22, $21.42. We'll keep that working. Might buy another one somewhere right around this low tail in here, $22.68, something like that. Those are kind of the ranges that we're looking at on that one as well. Pointing out real quick, that's that coffee chart. This thing is like at a 10-year high. We took some profits on those today. Oil market, slightly small correction going. We get back in this consolidation range. We'll probably be stepping in those 500 barrel contracts. There are 100 barrel ones if you're a smaller client of ours. You had big reversal on sugar to the upside today. You also had on the grain side, those crop reports came out. Look at corn, bam, pushing on up here. Soybeans, boom, pushing on up. South American weather problems, and also, the exports over there. They've been exporting like crazy to China. Now China might switch to buying some from us. Wheat is a market that I'm keeping. It's range bound. We come back down. I'm going to buy some call options on wheat, buy some wheat futures. I think I'm just going to play this kind of range right here. And then I have this upside tailwind where if Ukraine and Russia go to war or whatever, any disruption in the Black Sea, you could see wheat push on up and get aggressive. So might do a scaling on some wheat futures as well. So that's about it. Those are the only things that I wanted to identify. You got any questions you want me to touch base on any of their markets, shoot me a note, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.